So the topic for today's debate is: will banning tips based on target prices and stop loss help or hurt the market? So the general opinion across the world about India is that Indians by nature are very fatalistic in their attitude towards life. They are always looking for somebody else to give them advice, to give them direction, whether it is Godman or whether it is, you know, Ayurvedic doctors or whether it is the stock market. They are always looking for somebody else to take responsibility for the decisions that they are making in life. Stock market, again, like I said, is one of those aspects where we are continuously looking for somebody to give us tips, somebody to give us direction, how we pick and how we make decisions about our finances. One of the things that has significantly impacted our decision making are tips that we get either from newspapers or from media or from even experts that we believe know more than us. While the reality of the stock market is absolutely nobody knows more than anybody else about where the market is headed at any given time. No matter how much you study, no matter how much you learn, market is always driven by the by the motivation and the desire of entrepreneurs who are always looking to change direction and always looking to introduce new pivot points in the direction of businesses and economies. Stock tips have become a very big impactor of the stock market in India. Today, we want to question whether it is a good practice or a bad practice, whether it helps us or it really hurts us when it comes to making financial decisions.
So the question is, will banning all target prices and stop loss tips help or hurt the market? We are for hurt the market. It will definitely hurt the market. The first question is, what are the primary motivations behind the practice of using target prices and stop loss orders in trading? So let's understand. Let's begin with target prices. In FactSet's earnings insight report, analysts publish 12-month target prices that form a bottom-up target, which means it depends on the fundamentals of the company rather than on the market trends. And it has been conducted for the S&P 500. The chart in this report actually shows two lines: the projected target price and the actual index movement. By This is a bar chart also, and by comparing these two curves, we see that target prices provide a structured benchmark that helps investors frame risk and reward and prevents emotion-driven trading. Now, let's examine another experiment. It was conducted by the University of Constance. That is the effect. I mean, the experiment was on disposition effect. In simple words, it is the tendency to sell winners too early or winning positions too early and hold losing positions too long. So this graph actually plots the cumulative distribution of disposition effect across three groups: no limit group, that is without any target price and stop loss; a limit group with target price and stop loss; and a reminder group, that is without any strict rule, with soft reminders. The solid line that we see actually shifts clearly to the right, meaning higher disposition effect values and more emotional mistakes. The dashed line, as we see with target price group, shifts sharply towards the left, showing far lower disposition effect values. And of course, the middle one, the dotted line, sits in between. The visual shift proves that predefined exits, target price, and stop losses meaningfully reduce emotional behavior. Uh, and of course, it is completely evident from the figure. So predefined exit matters a lot. And then coming to another figure, that is under the same market condition and identical price movements, as we see that most points fall below the 45-degree line. This one, that is the PLR, proportion of losers realized, it shows that it increases, meaning traders finally book losses when needed. And PWR, proportion of winners realized, stays stable, meaning they continue taking healthy profits. So together, it shows that targets reduce the disposition effect by creating a balanced exit strategy. Let's consider another example from JP Morgan. They applied a 5% stop loss overlay to the Carhart momentum strategy. And as the table clearly shows, that annual returns rising from 4.6 to 8.8%, Sharp ratio improving from 0.27 to 0.64, and maximum drawdown shrinking from minus 57.6% to 25.8%. So these data points visually demonstrate how stop losses cut tail risk dramatically. And again,
30 seconds more.
okay, and JP Morgan's multi-asset test across equities, bonds, commodities, and FX shows the same result. So stop loss overlays cut tail risk, drawdowns shrink dramatically. So these are the primary motivations validated, that it counters emotional trading, enforce discipline, pre-planned decision making, reduces drawdown, protects capital, anchors expectations, increases consistency, and promote healthier, more stable market behavior.
Topic being the same, why banning all the tips based on target matches and SL help or hurt the market? We are in the favor of helping the market. So first question remains the same. Primary motivators behind the practice of using target price and SL orders. I feel like we have to divide the people into two segments to actually understand why do people do this. What is the primary motivator? So there are two parties involved. First one is the people who give advice. What is it in for them, and the one who takes it. Why do users takes it? So recommending are generally known as advisors or sell side analysts, and you can see that's how typically we are given advices on a lot of platforms. Even that is bifurcated into some credible platforms or SEBI research analysts. Plus, there are a lot of tips that is circulating around Insta, social medias. Influencers are there today who talks about what to buy, what to have to create with. The second one is the accepting people, which are users, which are common people like you and me who accept it. So this was today's recommendation, which was in Times of India. So what is the primary motivation for advisors, the people who recommend it? Why do they give the recommendation? The main reason goes is to increase the volatility. If you see here, analysts, there are these are proven studies and proven data which shows that analysts recommend increased trading volume by 22 to 35% in the next 3 days of the release. Whenever they tell you a buy or a sell or a hold one, that stock will trade more than the normal stock. And there are these are some studies, and the links are there for those studies to verify it. Everyone says the same thing. So I have taken the stock in the past year which have been recommended the most, which was Bajaj Finance. In India was the most recommended stock from all the brokerages. I've gone through a number of brokerages, and this was the one. And I have taken the data, and I have gone to see the share prices among different trades. After the sell ratings, there was a sudden increase in the way shares were trading. So this is the Bloomberg data for Bajaj Finserv for a very long time, and this was just the day after it was given a buy call, and you can see there was a sharp increase in it. That is the primary reason to increase the brokerage. And the second reason, if they are going to increase the volume, which will directly related to how their brokerage will be increased. Client engagement is increased, their transaction volume is increased, which eventually results in more brokerages, and they can also track their data very nicely, and all of those things. This has been proved by these two studies. So if you see the commission line, all the states have the commission line which has been decreasing. But if you see the commission line, the data is for US, because in India we cannot really find the data. It has been increasing over the years. And if you see that, if you see the very traditional patterns in mutual fund is that we don't follow the mutual funds. We kind of follow the analyst, how the analyst perform. If the analyst moves to another firm, we tend to fluctuate with those kind of funds. We tend to shift to that fund, which is a recent pattern that has been seen in India. And if you guys remember, there has been a case study which has been done by DD team also, which stayed where there was a practice which was being done in DD team, DD group, where every day, or at least on alternate days or on some days, there used to be a photo of recommendation that some of you would send from daffodils, and then just what 10 15 days back, we collected all the data, we have gone through that, and we have checked how much those uh, stop losses and target price were actually true. So it has been shown that these are the people. So I have not taken the names of the company they are associated with.
How
These are the
come?
name of the people. Yeah. So these are the name of people, and we see most of them cannot even perform well for that time period. So it's not like giving, if they are giving the recommendation, it is going to be true. It is just to drive the volume up, they are going to do that.
Richa, you mentioned that whatever data points you mentioned, it reflected that it increases the brokerage, right?
Correct.
And also it also enhances the volatility. That's
Correct.
that's a summary of the data points that you have mentioned. And so, in other words, you're saying that if target prices and stop losses are banned, then it would actually reduce volatility, and it would also keep a check on the brokerage as well. So, in other words, you're saying that it will keep a check on the brokerage, which means that again, brokers won't get motivated, and they will certainly find other routes and channels to channelize and provide services to their clients through, of course, unofficial channels and channels that are not regulated by SEBI. So it's not actually clear to me how it will help the market, because there is no certain connection between your data and any proof point that it can help the market. Your data points show that it can increase the brokerage, or increasing the brokerage, or it enhances the volatility.
Point taken. But my question was, what was the primary motivation behind the practice of using target price and SL order in trading? I didn't have to prove it is wrong. My arguments have to give a strong, precedence to what we will be proving, that it will help the market. But I didn't have to prove in the first question itself that it is wrong. But all my data points says that yes, if we will do this, maybe things will change for better. And that was the question. I didn't have My question didn't say कि prove that it will help the market. My question
Uh,
was on what is the primary motivations. And look, if you have to get to the conclusion, yes, it will help the market if we will ban it. It creates artificial volatility, it creates artificial price points. It is not true. See, that's the herding thing that happens. You know Adani, right? You know the Heidenberg saga happened. We know Adani has a very strong hold book, but just because Heidenberg came with one thing, it fell down to so many things. What happened? That's just the reason. And you tell me one thing, right? All these stockbrokers that we are talking about.
So the question is, how do target prices and stop loss orders impact market volatility and investor behavior? Target prices anchor expectations. FactSet's index level aggregate indicates bottoms up target price for the SP 500. This creates a shared expectation corridor. So when the index gets below this corridor, investors perceive undervaluation. When it trades above, they expect mean revision. The graph of the actual index versus the target corridor shows how target prices stabilize expectations rather than amplify noise. Impact is more data driven decisions. and soften long-term sentiment-driven volatility. As per behavioral finance evidence, the disposition effect research, like Deep already mentioned, it shows that the disposition effect is when traders without predefined targets sell winners too early and hold losing positions for too long. Now, as per the University of Constance, in this scatter plot comparing disposition effect values with and without target prices and stop loss, it shows most of the dots lying under the 45-degree line. This shows that even with identical price movements, investors and target prices and stop loss have lower disposition effect scores. Discipline comes from the rule itself and not from the market condition. The impact is less impulsive trading, better risk alignment, and reduced micro level emotional volatility. Again, target price revisions guide price discovery. A study of 4,198 target price revisions in Taiwan shows measurable changes in the net buying and selling around revision announcements. Tables and cumulative trading charts indicate over orderly reactions. Upward revisions generate net buying while downward revisions create net selling. So the finding is target price revisions carry information content guiding price discovery instead of creating chaotic volatility. The impact on volatility is very short term, yet it's information driven and not emotionally induced. Stop loss orders reduce tail risk volatility. This is as per the JP Morgan study in the Carhart's momentum factor. They applied a 5% stop loss that produced a maximum drawdown from 57.6% from minus 57.6% to minus 25.8% with the Sharpe ratio going from 0.27 to 2.64. The data table shows equity curve becoming dramatically smoother and stop loss orders materially reduce tail risk volatility that shows fewer forced liquidations, fewer volatility shock events, and more stable long term returns. Real data set from a UK study conducted on 65,233 round trip positions show at the same outcome. Traders using stop losses to avoid large loss clusters and show lower behavioral volatility span. So, the conclusion is that the target prices will provide structure, anchor expectations, and smooth long term sentiment scatters, while stop loss orders will protect capital. So, the final takeaway is that the target prices create expectation stability, stop losses create risk stability, and together they drive more discipline and less volatile market behavior.
So the question is, how do target prices and stop loss orders affect market volatility and investor behavior? First, we will see that why stop loss and target price tips harm the market. When someone broadcasts a target price or stop loss tip to thousands of traders, something predictable happens. Everyone enters at the same price, everyone takes profit at the same target, and everyone exits at the same stop loss. This is not natural market movement, it's synchronized human reaction. And synchronized reaction create artificial volatility. Instead of thinking, people start reacting. Instead of research, they just follow the instructions. Discipline goes down and emotions go up. There is one target price case study. Case study name is Impact of Target Prices on Equity Volatility. In 2022, Han and his team studied what happens when analysts publish new target prices in equity market. The results were crystal clear. The moment a target price is announced, the stock jumps sharply. Trading activity surges and volatility shoots up within minutes. But the jump doesn't last. Within days or weeks, the price quietly drifts back down. This proves something very important. The spike wasn't caused by fundamental, it was caused by emotion. Target price mislead investor. They create excitement, noise, and short-term mispricing that the market later correct. There is one more study called Stop Loss Orders and Forced Selling in Equity. In this, Richard and his team looked at thousands of equity traders and found something many of us have seen. Stop loss usually trigger during normal price movement. Think of it like the stock dips a little, hits the stop loss, the trader gets forced out at a loss, and right after that, the stock recovers. We have all seen this happen. The studies show that stop loss based tips don't protect retail traders, they often push them into losses that didn't need to happen. There are some Indian examples of retail losses due to tip based manipulation. We have seen the Avdut Sate case. In this, the target prices and stop loss order affect market volatility and investor behavior. In the Avdut Sate case, lakhs of traders were acting on identical target price and stop loss calls that created herd behavior and artificial price movement, exactly the kind of volatility we are talking about. There is one more case in which the Hyderabad case shows that behavioral damage. When traders follow fixed target price and stop loss levels blindly, they stop thinking rationally and take impulsive high risk decisions. There is one more SEBI case when SEBI crackdown on WhatsApp and Telegram groups confirms that mass target price and stop loss tips cause artificial price movement and repeated retail losses. Barber and Odeon research showed that overconfident traders trades too much and lost money. Target prices fit this overconfidence. Analysts say it will reach 500, so it must reach 500. Next, the 2024 attention study shows that bold numbers like a target price instantly grab attentions. And when attention spikes, the impulsive decisions also follow. There are SEBI findings which confirm that SEBI enforcement reports show something alarming. Most action target unregistered tip providers, and almost all of them use target price and stop loss tips. SEBI found that these tips are used to herd retail investor, making their action predictable. And predictable investors are easy to exploit. But here the more shocking numbers are 92% of traders who followed tip-based calls lost money. And also around 97% of SEBI actions are on tip providers who gives tips on stop loss and target prices. This is real damage happening every day. So removing these tips will reduce artificial volatility and herd reaction. It will reduce emotional trading and also protect small investors from manipulation and push people towards research instead of shortcuts. What we are banning is the mass broadcasting of this number, the misguidance and mass herdings. We are not banning tools, we are banning mass tips that misuse these tools and harm retail investors.
Kunal, in most of your studies, you constantly mentioned that there was a lot of hoarding that was visible. But if we say that target prices create hoarding, most of our data, the FactSet data, the Taiwan study showed that the reactions were orderly. Whenever there were upward revisions, there was net buying. Whenever there were downward revisions, there was net selling. So this is more about the mindset than actual reaction to the uh, target prices and the stop loss, because holding is mostly an emotional behavior that comes up, and the mindset won't change because they would still resort to unregulated channels. So banning target prices or stop loss won't help. What do you think?
If we are giving one particular target price, they are actually going into herding mentality. And imagine there is a stock price, and if all of us will have same stop loss, and every order will trigger, how are they gonna adjust all the orders? What if there are not enough buyers for that price? It will obviously break down to a low, right, which was not expected by the stock itself. And that's what we mean, that it will create artificial pricings, mislead the volatility. That's how it manipulates the market. That's what have been.
Also, yeah.
And when everyone puts the same stop loss and target price, now the market behaves as an artificial. It's not based on the fundamentals, which I have proved.
The Weber, we mentioned that having tips like creates volatility in the market, but market volatility can introduce several biases in investment decisions like recency bias, hoarding bias, overconfidence bias, and there are several studies that had proved that volatility driven biases creates false confidence and can lead to financial losses. So how can volatility be helpful for the traders?
Exactly, we are talking
Volatility
about.
volatility is not helpful for the traders. What I am saying is tips
Okay.
based target price and stop losses. If let's say if we remove let's say if we remove the or let's say ban them, even if we ban them, the mindset is not going to change.
Disposition effect, one thing about disposition effect, that there were no clearly defined x-axis and y-axis on the
Correct.
disposition effect. That's one thing. So that we didn't understood about that. Then the second point we mentioned is like it creates volatility. About volatility, I have already mentioned ki it creates certain biasness, as you said, Roy sir. Ki there, like whenever there is target price and like people follow target prices and stop loss given by the tips, like being given by the tips, they do it in a herding kind of behavior occurs in the market, right? Which is which implicates the false performance of this stock market. So in these cases also, there are several studies that has proven ki in these cases many traders have lost their money.
So the next question that we'll be addressing is whether banning target prices and stop loss tips sort of create stability or it fuels speculation. Our take is simple. Any ban sort of backfires, and it in a way pushes traders into like a riskier zone, which sort of ultimately increases speculation and not reduce it. If you see in 2008 US short selling ban, which is also documented by Burmer, Jones and Zhang, showed like a 77 collapse in short selling, which ultimately worsened liquidity, and again there was no improvement in market stability as well. A similar displacement was also occurred when ESMA in 2018 introduced leverage caps, where brokers rapidly shifted clients to offshore jurisdictions. And this can also be a similar pattern can also be seen in ASIC submission behavior, where it warned it said that retail traders will move to unregulated offshore brokers. In the UK, the FCA documented that around 75 million euros had like a retail loss from offshore CFD schemes after certain like a displacement. So if you see, when regulated advice is restricted, traders sort of immediately migrate to a higher risk alternative. As an inference, if the pattern again repeats, so if you see, regulated channels can't just provide clarity, but traders immediately migrate to like an unregulated high risk alternatives. See that traders actually go when regulated guidance disappears. That is, they move more towards the social media tip channels, and these operate very differently from regulated advisors. So there's no risk framework or no accountability, where there's just aggressive promotion going on. So again, the inference that we come is very straightforward, where when regulated entities are silenced, there is unregulated channels sort of become the primary source for all of them as a guidance, and these are all built for speculation but not stability in a way. Research by Hamrick also recorded that around 952 Discord pumps and
30 seconds
2469
left.
Telegram pumps in just 6 months.
So the third question is, would banning tips based on target price and stop loss lead to greater market stability or increased speculation? So let us first understand when can we say that what is stability? So stability means a market condition where price moves within a particular range, controlled range, without sudden spikes or crash. It reflects balanced participation, rational decision making, smooth price discovery. So what are the factors that shows that market is stable? So first is low volatility. Then the second is rational decision making. Then the third one is accurate price discovery. When we say that there is a stability in the market, there should be these 3 points should be there. These elements emerge when traders act independently. When decisions are driven by mass tips, price movements become artificial and erratic, weakening these pillars of a stable market. Now, like, do tips really affect market? So This SEBI survey data highlights how deeply external recommendations shape investor behavior. Personal contacts, influencer, and digital peer groups dominate as information sources, with around 62% of investor basing decisions on social media recommendation. One tip can rapidly influence a huge pool of traders. So we can say when people follow certain tips and target prices, this led them to follow the herding behavior. They buy at the same price and sell at the same price. This impacted to the herding behavior of the people. So tips created coordinated crowd states, and coordinated crowd states causes volatility. It's market math, not opinion. The concept of herding explains how volatility intensifies when traders follow the same signal. There is a research on coordinated agents show that a single external cue leads to waves of buying or selling, creating volatility cluster. In the graph here, this is about the returns in herding economy. The graph of the herding economy visually demonstrates unstable returns. Large upward spikes are followed by sudden crashes, highlighting an environment driven by exaggerated crowd reactions. These irregular fluctuations show how relying on share tips produces unstable outcomes. Then there is another graph showing returns in non-herding economy. This graph represents a healthier market structure. Here, returns are smoother, movements are moderate, and extreme spikes are rare. This pattern emerges when decisions are independent and diversified. Now, let us understand about how rational decision is affected. So, target price tip encourages traders to outsource judgment and ignore fundamentals. When decisions rely on someone else's prediction, thinking becomes reactive rather than analytic. Research like Barber and Odin shows that traders who depend on public signal tend to overtrade and perform poorly. This loss of irrationality feeds volatility and weakens market quality. There are international regulatory evidences. Global regulatory experience shows a consistent pattern. When authorities clamp down on top-driven schemes, manipulation decreases and market integrity improves. Australia reduced social media pump and dumps. The UK lowered boiler room scams. China curbed microcap manipulation, and India reduced SMS tip fraud. Historically, regulatory action against tip has aligned with better stability. We can observe the effects of these actions has over there. SEBI's crackdown on high-profile pump and dump via social media tips in Jan 2022 signaled enforcement seriousness, which may have deterred at least some manipulative unregistered tip-based tradition strategy. The India VIX trend illustrates how volatility behaved over time. Volatility peaked around 2020 to 2021, but began declining from 2022 onwards. This timing matches SEBI's crackdown on unregistered social media tipsters in January 2022. Although other factors also influence VIX, the decline aligns with a reduction in coordinated tips-based speculation. The researchers reinforce the entire argument. Informational cascades form when people follow other public signals. Trading leads to underperforms pump and dump activity arises from shared tips, and sudden signal create volatility spikes. These findings make it clear that tips amplify noise and destabilizes prices, while independent decision making strengthen market structure. So here are some researches that has proved these things.
Of course, there is also no data from your end wherein it shows it just shows the market volatility impact on the market volatility and all that, but it doesn't show anything about the future, what ban can do and all that. I mean, we have shown the future that it's already existing a lot of unregulated channels. In spite of the ban, a lot of unregulated channels traders are going into to take the tips and all that. So do you think, I mean, we don't think that after the ban, traders would stop taking tips. Rather, it would proliferate. It would only increase, because when you restrict something or somebody from doing something, actually his mindset remains the same. So he will go and turn over to other channels to get the same thing. So we actually don't think that the ban will improve the situation or market stability.
Adding on to that as well, regarding the pump and dump cases that we mentioned, right? The SEC's $100 million case, or the SEBI's ban across the YouTube networks. All of these all of these are like an unmonitored group. So the pumps created real volatility in real listed stocks itself. So the impact just doesn't stay inside Telegram, but it's again spills straight into the market as well.
So as Deep sir, you said that we haven't showed anything like that in like removing tips like will affect the market volatility and bring the stability. So I have shown two graphs. Graphs one was returns with herding behavior. Firstly, I tell that there is volatility coming from the herding behavior. Then I mentioned these two graphs. Let me share that again. So I showed this graph returns in herding economy, like how there are how there are sudden spikes and volatility, whereas the returns in non-herding economy is kind of stable and like there are no sudden spikes and all. Shown this, whereas whereas you said that you shown some like future related things, so these are only estimated, but we have shown the calculated and studied things.
लास्ट क्वेश्चन है, could banning target as a stop loss step reduce in increase risk of manipulate in the market? को स्टेट किया था कि अगर स्टॉप लॉस टारगेट प्राइस रिलेटेड टिप्स को बैन किया जाए तो बहुत हद तक मैनिपुलेटेड चांस जो है वह कम हो सकता है, कि एडवाइजर सिर्फ रिसर्च के ऊपर ही डिपेंड करे कि ना करे, प्री पैकेज टिप्स के ऊपर, और कुछ भी रेगुलेटेड का यह भी मानना है कि ये टिप्स को अगर बैन किया जाए तो वो भी ट्रेड यूनिफॉर्मली को रिड्यूस करेगा और स्पेकुलेटेड ट्रेडिंग को भी बहुत हद तक रिड्यूस कर सकता है। इससे क्या है कि ट्रेडर को भी सिर्फ फंडामेंटल के ऊपर डिपेंड करना पड़ेगा, ना कि टिप्स बेस्ड ऑन टारगेट प्राइस ऑन स्टॉप लॉस। बट इन रियलिटी को सब गलत, ये सब गलत है। इसको मैनिपुलेट, क्योंकि टिप्स कभी भी एग्जिट करेगा, टिप्स का ये प्रॉब्लम नहीं है। प्रॉब्लम यह है कि ट्रेडर जाएगा कहाँ? बैंक के पास ही। ऑफकोर्स ट्रेडर जाएगा बैंक के पास ही जाएगा। आप देखोगे बहुत सारे चैनल है, फॉर एग्जांपल ट्विटर में स्टडी किया गया था। 20 मिलियन स्टॉक ट्वीट की से बहुत सारा लार्ज वॉल्यूम असल में स्पैम से, बॉट से मैनिपुलेशन, तो रोबोट के ऊपर भी डिपेंडेंसी अभी भी रिटेल ट्रेडर्स को है।
Could banning target price and stop loss tips reduce or increase the risk of manipulation? So, what is manipulation in the stock market? Market manipulation is the intentional and artificial manipulation of supply and demand to influence a stock price. Let's see the some types of manipulations. Pump and dump. Manipulator secretly buys a cheap liquid stock, then spread bullish tips like YouTube, टेलीग्राम एंड एसएमएस पे आप देख पाते हो कि कैसे वो पंप एंड डंप के लिए आपको टिप्स देते हैं उनके बेनिफिट्स के लिए, जबकि वो खुद ही पहले जो स्टॉक्स है वो पर्टिकुलर स्टॉक वो खरीद चुके हैं और उससे फिर वो उसके लिए फिर वो टिप्स देते हैं ताकि हग अमाउंट पे जो लोग हैं वो उनसे इन्फ्लुएंस हो सके। देन इन्फ्लुएंसर ड्रिवन टिप्स। जो इन्फ्लुएंसर्स है, इवन जो जैसा अभी देखा अब्दुल साटे जो था वो अनरजिस्टर्ड इन्फ्लुएंसर था, कितने लोगों को उसने इन्फ्लुएंस किया, कितने बड़े बड़े लोग जो उसमें फंसे, 8-8 9-9 10-10 लाख का जो लॉस हुआ। तो वो कहीं ना कहीं इन्फ्लुएंसर्स और उनके उसके जो फॉलोअर्स है उसके बारे में हुआ। तो वो जो फॉलोअर्स जो उनको फॉलो करते हैं, जो इन्फ्लुएंस करते हैं, और वो अपने बेनिफिट्स के लिए लोगों को इन्फ्लुएंस करके अपना जो एडवांटेज है वो निकलवाते हैं। तो कहीं ना कहीं वो भी एक चीज़ आ जाती है। देन सेकेंड है कि मिसलीडिंग रिसर्च एंड स्टॉक प्रमोशन टिप्स। तो आप कई बार देखोगे कि मिसलीडिंग रिसर्चेस होती है, जो कि झूठी रिसर्चेस भी कई बार दिखाई जाती है कि ये वाला स्टॉक बढ़ने वाला है, ये वाला पर्टिकुलर फील्ड बहुत ऊपर जाने वाला है। कोई सा रेलवे सेक्टर फॉर एग्जांपल बोल रहा हूँ, कोई रेलवे सेक्टर फॉर एग्जांपल नहीं भी जा रहा है, बट कई बार दिखा देते कि रेलवे सेक्टर भी जाने वाला है, तो जल्दी से जल्दी रेलवे रिलेटेड स्टॉक्स करो। इवन बड़े प्लेयर्स का इस पे कई बार गेम होता है कि वो ऑलरेडी पैसा लगा चुके हैं, अब वो कैसा पंप करना है उस स्टॉक को वैसा दिखा के, और फिर मिसलीडिंग रिसर्च के जरिए से वो आपको अंजाम देते हैं। उसके बाद स्टॉक प्रमोशन टिप्स देते हैं। कई बार आप देखोगे कि एक बेगर स्टॉप है उसको भी हाँ टिप्स मिलती है, तो वो स्टॉक को प्रमोट किया जाता है बेसिकली। Then banning on tips, especially unregistered influences, reduce market manipulation because it removes a key distribution channel and coordination tool that manipulators need for pump and dump and similar schemes. तो टारगेट जैसे टारगेट प्राइस टिप्स है, स्टॉप लॉस रिकमेंडेशंस है, वो जो रिटेल ट्रेडिंग के लिए यूज़ होता है, अनरेगुलेटेड चैनल्स है, वो भी कहीं ना कहीं इसमें शामिल है। तो उसमें क्या होता है कि जब वो प्राइमरी जो सोर्सेस रहते हैं, लाइक अपना जो इंस्टाग्राम और जो प्राइमरी सोर्सेस है, उस पर वो लोग टिप भेजते हैं, और उस टिप रिलेटेड जब वो जो लोग हैं वो हग अमाउंट में जब वो खरीदते हैं, खरीदते खरीदते जाते हैं, और सडनली वो जो स्पाइक होता है उस पर फिर वो लोग बेच देते हैं। तो जब उनका जो बेनिफिट है वो डायरेक्टली इन्फ्लुएंस वाले जो लोग हैं या जो इन्वेस्टर्स है वो ले लेते हैं, जो टिप्स दे रहे हैं उनके बिहाफ पे और उनके बेनिफिट्स के लिए। तो वो एक स्टडी यहाँ पर आई थी, सेबी ऑर्डर्स हैव रिपीटेडली सीटेड टारगेट प्राइस रिकमेंडेशन इन टेलीग्राम व्हाट्सएप ग्रुप एज अ कॉमन टेक्टिक इन पंप एंड डंप स्कीम्स। सो यहाँ पर 23-24 की एक स्टडी थी जिसमें उन्होंने बताया था कि किस तरीके से सेबी ने बताया कि कैसे जो व्हाट्सएप एंड टेलीग्राम है उस पे वो लोग स्कीम्स और टिप्स देके और लोगों को कैसे झांसे में फंसाते। देन सेकंड और एक स्टडी हमने एक देखा जिसमें many TPSL recommenders are not based on fundamental. Mostly public TPSL tips come from unregulated influencers, private chat groups, black box trading system without audit paid distributor with no free study responsibility. और ये सब चीज़ें भी एक रिपोर्ट में दिखाई गई है 22 के इसमें ESMA के रिपोर्ट में, जिसमें हुआ है कि रिपोर्ट फाउंड दैट इन्फ्लुएंसर ट्रेडिंग टिप्स फ्रीक्वेंटली कंटेन conflicts और इंटरेस्ट एंड ऑफ्टन दे परचेज द स्टॉक बिफोर ऑफरिंग द टिप। वो जो टिप देते हैं उसके पहले ही वो स्टॉक खरीद के रख लेते हैं, और उसके बाद फिर जो उसका जो रिजल्ट है, और जैसे ही वो स्पाइक करता है, जैसे ही वो उनको पता होता है कि वो कब उनको बेचना है एंड ऑल, तो वो उस स्ट्रेटेजी के अनुसार चलते हैं एंड लोगों को इन्फ्लुएंस करके ठग लेते हैं। वाई टिप्स क्रिएट distortions? It is not a tool's target price or stop loss that distro may market. It is a broadcasting of tips based on them in small mid cap crash stocks. Such tips often trigger herd entry at the same price zone, prediction magnets where prices drift artificially toward the target pump and dump vulnerability due to coordinate entry exit, short-term mispricing and false momentum. Why a ban helps? Remove manipulative signaling that mislead retail investor, reduce
हमारा
artificial liquidity.
तरुण, तो आपने जो भी डेटा दिखाया लगभग सिमिलर डेटा ही दिखाया अलोंग द सेम लाइन, पर उससे कोई कोरिलेशन नहीं है कि मार्केट स्टेबिलिटी वो इम्प्रूव किया है बैन के बाद, जो भी है। तो मार्केट स्टेबिलिटी इंक्रीज किया है, अच्छा किया है, और लेट्स से स्पेकुलेशन डिक्रीज किया है, रिड्यूस किया है, ऐसा कोई डेटा आपने दिखा नहीं पाए। आपने सिर्फ बैन बैन और बैन बोले। तो हम लोग क्या दिखाए कि एग्जैक्टली हम लोग दिखाए कि बैन के बाद भी बहुत सारा इन्फ्लुएंसर्स अक्रॉस द वर्ल्ड, सिर्फ इंडिया का बात नहीं है, बैन के बाद भी बहुत सारा अनरेगुलेटेड चैनल्स अभी भी चल रहा है, और वहाँ पे बहुत सारा ट्रेडर्स है जो ये स्पेकुलेटिव एक्टिविटीज कर रहा है, और ये बैन के बाद भी हो रहा है। ऐसा नहीं कि ऐसे भी कोई भी स्टेप नहीं ले रहा है। तो पूरा अगर बैन किया जाए तो अनरेगुलेटेड जो चैनल्स है, चाहे वो ऑनशोर हो या ऑफशोर हो, उसमें तो रिटेल ट्रेडर्स जाएगा ही, क्योंकि माइंडसेट तो आप चेंज नहीं कर सकते, आप जितना भी बैन लगा लो। तो वही हम लोग दिखाया, पर आपका कोई डेटा नहीं है पॉइंट जो आप दिखा सको कि यार स्पेकुलेशन रिड्यूस किया है या मार्केट स्टेबिलिटी इंक्रीज किया है।
Yes.
Deepika, you talked about कि like speculation बढ़ता है या नहीं बढ़ता है, but the question was about कि manipulate होता है टिप से मार्केट या नहीं होता है। तो
नहीं,
तरुण has
वो
clearly
क्वेश्चन नहीं
shown
था,
कि
एक मिनट
वो
एक मिनट
क्वेश्चन
एक मिनट एक मिनट एक मिनट, तुम्हारा टाइम हो गया अभी, बोलने दो ना उसको, थोड़ा खत्म करने दो उसका पॉइंट। हाँ हाँ बोलो लक्ष्मी।
Okay, so I was saying, the fourth question was, could banning target price and stop loss tips reduce or increase the risk of manipulation in the market? So the question is this, and Tarun has clearly shown कि how the pump and dump schemes affect
नहीं,
the
क्वेश्चन
like
तो गलत
manipulates the
गलत बोल
scheme.
रहे हो।
No,
क्या
I'm
गलत हो
speaking
रहा है?
to correct question.
नो नो नो।
फोर्थ क्वेश्चन
Yeah.
क्या है बताओ, कोई पढ़ के बताओ। तरुण पढ़ना पढ़ना क्या है फोर्थ क्वेश्चन? तरुण
Could banning target price and stop loss tips reduce or increase the risk of manipulation in the market?
तो अभी इसमें क्या डाउट आ रहा है?
That lead to greater market stability or increased speculation?
That was the third question, sir.
Yes, exactly.
हाँ बोलो बोलो
Okay.
लक्ष्मी.
So one point I have mentioned कि Tarun has clearly shown कि how pump and dump schemes manipulates the market and how tips manipulates the market.
मैनिपुलेशन इज डन बाय द टिप्स बिकॉज आप कितने भी टेलीग्राम चैनल्स पे देखोगे या सोशल मीडियाज पे देखोगे तो आपको समझ में आएगा कि कितने बड़े पैमाने पे मैनिपुलेशन हो रहा है.
चलो
आपका
ओके.
क्वेश्चन ये है कि यस
हाँ बोलो 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 खत्म.
आपका क्वेश्चन ये है कि क्या मैनिपुलेशन इम्पैक्ट हो रहा है कि नहीं हो रहा है. तो मेरे हिसाब से ऐसा है कि अगर आप टिप्स और टारगेट प्राइजेस के बिहाफ पे अगर आप टिप्स दोगे तो कहीं ना कहीं कस्टमर का भी होप हो रहा है और एक साथ जब खरीद रहे बेच रहे या फिर अगर इतने बड़े अमाउंट में लोग अगर वो टिप्स को फॉलो कर रहे हैं.
CS team 131, marketing team 109, right?
हम्म.
I mean, it was a tough topic.